Airbnb recently reported its earnings, and I have been asked many times what my thoughts are on the stock today. So in today's video, I want to go through Airbnb's earnings, its fundamentals, and its price today, so we can answer the question as to whether the stock is looking cheap or not. So with that being said, let's dive right into the video. And as always, I have a Daniel Pronk slideshow for all of you. So here we can see that Airbnb did grow its Q4 revenue to $2.2 billion, which is growth of 17% year over year. For the full year of 2023, they also did $9.9 billion in revenue, which is up 18% year over year. So Airbnb is growing its overall revenue quite well. 17% year over year growth is actually really strong revenue growth. Then down at the bottom here, we can see that free cash flow for the full year was $3.8 billion, which is up 12% year over year. So overall cash flow is growing with the revenue. For the full year of 2023, Airbnb's free cash flow margin was also 40%, which is really, really high. I believe that's actually above Google's free cash flow margin. So Airbnb is a very profitable business. Moving on, we can see that gross booking volume was $15.5 billion on the quarter, which is up 15% year over year, and $73.3 billion for the full year, which is up 16% year over year. So gross booking volume at Airbnb is also growing really well. Nights and experiences booked was 99 million, up 12% year over year, and 448 million for the full year, which is up 14% year over year. So people are using Airbnb more and more. So overall, Airbnb's business does look like it is growing quite strong still. Then Airbnb talks a little bit more about its business and points out some highlights right here, which says, making hosting mainstream. We're focusing on making hosting just as popular as traveling on Airbnb, and we believe our approach is working. In Q4, our host community surpassed 5 million hosts around the globe. Active listings exceeded 7.7 million at the end of 2023, increasing 18% year over year. So more and more people are hosting on Airbnb, and hosts did increase by 18%, which is good to see. Perfecting the core service. Over the past 3 years, we've launched more than 430 new features and upgrades to our core service. We've made significant improvements to make Airbnb a more affordable and reliable option. We're already seeing a positive impact. For example, host cancellations decreased by 36% in the fourth quarter of 2023 compared to the same period last year. And 2/3 of our hosts now offer weekly or monthly discounts. We'll continue responding to feedback from the community, and in 2024, we'll continue to improve the quality and reliability of our stays. Then Airbnb says that they're expanding beyond the core now. Airbnb is at an inflection point. We spent the last 3 years perfecting our core service, and now we're ready to embark on our next chapter. To unlock more opportunities for growth, we're investing in underpenetrated international markets, and we're seeing great results. Following the success we've seen in recent quarters in Germany, Brazil, and Korea, we're now expanding our playbook to countries including Switzerland, Belgium, and the Netherlands. We also believe that now is the time for us to expand beyond our core business and reinvent Airbnb. While this will be a gradual, multi-year journey, we're excited to share more about this later in 2024. So it looks like Airbnb is now trying to expand beyond its core business and get into more revenue streams. This also means that Airbnb could be looking for more growth avenues beyond what the business is today. And it sounds like Airbnb is going to be announcing more of its plans throughout 2024, but I do think that this is a great idea by Airbnb because it could open up the business to more growth verticals and get the business's overall TAM expanding over the long term. Then Airbnb shares that they repurchased $750 million worth of shares in the fourth quarter and $2.25 billion worth for the year of 2023. So the company is actively buying back shares and they are repurchasing a large amount of shares. Then they also shared some more business highlights right here, which says, guest demand remains strong, especially among first-time bookers. We exited 2023 with the highest quarterly growth rate of the year for first-time bookers. So there's a large amount of people experiencing Airbnb for the first time and using the platform for the first time. I actually think that this is a very bullish thing for Airbnb over the long term as well. Then they say that growth is accelerating in underpenetrated markets. We're seeing greater momentum for Airbnb across a variety of regions. In Q4 2023, gross nights booked on an origin basis in Brazil nearly doubled compared to the same period in 2019. So Airbnb's business in Brazil has doubled since 2019, which is a really strong growth rate and is great to see. Then they continue on and say, continued strength of nights and experiences booked in Latin America. In Latin America, nights and experience booked were 22% higher than the previous year. In Asia Pacific, nights and experience booked increased 22% on a year-on-year basis as well. And in Q4, nights booked in China on an origin basis increased nearly 90% year over year. So basically, Airbnb grew 22% in Latin America, 22% in Asia Pacific, and 90% year over year in China. I actually love to see this, because it means that Airbnb is growing around the world and more of its business is going to be coming from international markets and not just in North America. I also do believe that Airbnb's international business will continue to grow well over the long term, because I think that Asia Pacific is a great market to be in, as well as South America. There are billions of people in these markets, and there are a large amount of international travelers going to these areas of the world every single year. So growing in these markets, I do think, is very important for Airbnb. Now, what's also interesting is Airbnb shares its international revenue demographics by percentage. And here we can see that North America in 2023 made up 47% of the business's revenue versus 50% last year. So the business is becoming more diversified away from North America, as its international markets make up more and more of the business's overall revenue. And here we can see that Asia Pacific is now sitting at 9% of Airbnb's revenue, which is up 2% year over year. So Asia Pacific is making up a larger and larger amount of Airbnb's business, as these areas of the world are growing very strong for Airbnb. All right, moving on. Then Airbnb says that at the end of 2023, the company had $10.1 billion of cash and cash equivalents and short-term investments on the balance sheet. Now, this is very bullish, but it's also important to take a look at how many liabilities the company has as well. So I went and took a look at Airbnb's balance sheet, and right here we can see that the company has total current liabilities now of about $10 billion. So basically the company has about $10 billion in cash and about $10 billion in current liabilities. So that kind of neutralizes itself. Yes, the company does have billions of dollars in cash, but they also have an equal amount of current liabilities that they're going to have to deal with. So to me, it is bullish to see all that cash, but again, I think that the liabilities kind of cancel it out. Now, lastly, let's go and take a look at Airbnb's cash flow statement. So right here, we can see that their operating cash flow did grow to $3.88 billion from $3.43 billion last year, which is about 12% growth to the company's overall operating cash flow. Now, we can see that Airbnb does do quite a bit of stock-based compensation as well, at $1.1 billion, which is almost 30% of the company's operating cash flow. So to me, this is on the higher end of stock-based compensation. I know that this is a very polarizing topic, but personally, I do not love to see this much stock-based compensation going on, because it dilutes shareholders, which basically means that for Airbnb to remain at its current share count and not dilute shareholders, it actually has to spend about $1.1 billion of its operating cash flow to buying back shares and offsetting that stock-based compensation. And down here, we can see that Airbnb did repurchase $2.25 billion worth of shares on the year. But when we factor in the stock-based compensation, it means that Airbnb in reality repurchased about $1.1 billion worth of shares in the year that actually created shareholder value. Now, what is very bullish for Airbnb is they don't really have any capital expenditures on the balance sheet. If we take a look, their capital expenditures are right here of other investing activities, and it was only about $100 million. So the company actually doesn't really have any capital expenditures, which means that almost all of this operating cash flow becomes free cash flow for the business and its shareholders, which is what I love to see. And this is partly why Airbnb's free cash flow margins are so high. So now let's head back over to Stock Unlock and let's take a look at what Airbnb is selling for today. So the market cap is about $95 billion today. And again, the company produced about $3.8 billion in free cash flow in 2023. This means that the company is selling for a price to free cash flow of about 25. Now, in my opinion, a 25 price to free cash flow for a business that is growing its revenues at 17% annually is actually a pretty decent deal. And if Airbnb can continue to grow its revenues at 17% annually, then I do think that the stock is arguably selling for below fair value today. And let's head over to Stock Unlock's discounted cash flow calculator to show you what I mean here. So we're going to project out Airbnb's free cash flow over the next 5 years, and we are going to say that it is going to grow at 12% annually, which is the growth rate that Airbnb saw in 2023. So we're basically saying that Airbnb is going to continue to grow its cash flows at 12% annually. We're also going to say that it is going to buy back 1% of its shares on an annual basis over the next 5 years, which is about what the company is doing right now. We're also going to say that it is going to maintain its price to free cash flow of 25, which is what the business is selling for today. And personally, I do think that Airbnb can maintain a 25 price to free cash flow. One, because this is one of the most popular businesses in the market. Almost everyone knows what Airbnb is. The brand is very, very well known. It's also part of the S&P 500 now, so it's naturally going to see inflows from the S&P 500 and index investors. And it is a highly, highly profitable business with a 39% free cash flow margin, which is typically more attractive to investors. So I do think that Airbnb can support a 25 multiple of its free cash flows. So with these metrics right here, a 12% annual growth rate to free cash flow, a 1% buyback per year, and a 25 price to free cash flow, we get a fair value of $170 per share, which is about 15% above where the stock is currently trading. We also get a future stock price of $275, which is 86% above where the stock is trading today, and a compounded annual growth rate of about 13%. So if Airbnb can hit this metric of 12% annual growth to free cash flow, then the stock could outperform the S&P 500 and produce 13% annual returns. Now, if we scroll down, this means that Airbnb would have to generate about $6.7 billion in annual free cash flow by the end of 2028 over the next 5 years. The company did about $3.8 billion in free cash flow in 2023, so it does have to grow its free cash flow quite a bit by 2028. But I actually do believe that Airbnb can achieve this. Now, what I also like to do is a reverse discounted cash flow calculation to show what the market is currently pricing in to Airbnb's business. So to figure this out, all I do is drop down the metric growth rate until we get the fair value to about what the stock is currently trading for, which is about right here at 8.9%. So currently the market is pricing in about 8.9% annual growth to Airbnb's cash flow over the next 5 years. And again, maintaining that 25 price to free cash flow. If Airbnb can do this, then the stock will compound at about 10% annually and be considered about fair value today. Now, if we scroll down, for Airbnb to hit this growth rate to its free cash flow, it would have to generate about $5.8 billion in free cash flow by the end of 2028. Now, personally, I do actually think that this is a little bit bearish, and I do think that Airbnb is going to more than generate about $5.8 billion in free cash flow for 2028. So that is why I am leaning more towards saying that Airbnb is maybe under fair value today, but selling pretty close to fair value. It maybe is about 10 to 15% below fair value in the stock market today. Again, if the business can continue growing its cash flows at about 12% annually. However, it also looks like Airbnb is trying to grow its business beyond what it is today, which could potentially increase that free cash flow growth rate beyond 12%. So who knows, maybe Airbnb can actually grow above 12% annually over the next 5 years. But based on where the company is today with that nearly 40% free cash flow margin, it's also growing revenues at 17% and it's trading for a 25 price to free cash flow. It actually doesn't look that unrealistic in the market to me. I'm going to research the company a little bit more. I would personally want a little bit more of a margin of safety on my buy, but it is a stock that I'm going to add to my watch list and start following. I do think that the founders are absolute studs as well, and there is a lot to like about this business. The only thing that I do not really love is the high stock-based compensation at about 30% of free cash flow. So that's something that I would also have to overlook if I wanted to start a position in this business. So I'm going to think about it more, but that is my thoughts on Airbnb after its fourth quarter earnings results. And let me know what you all think down in the comments section below about Airbnb today in the market. Also, if you did enjoy this video, then please remember to leave a like on it. And if you want to check out Stock Unlock, which is the platform that I use here on my channel to do the discounted cash flow calculations, then you can go and do that with your own stocks for free by creating a free account. You don't even need a credit card and you can play around with the entire platform. But with that being said, that is going to wrap up the video, everyone. So thank you again so much for watching. I truly do appreciate it. And I really hope to see you all again in my next video.